Welcome back to the 365 Driven podcast. This is episode 435. And we're going to get into a topic that all you business owners need to really consider because it is the most important thing for your cash flow. We're going to talk about today on when to raise your prices. Very important subject. I know that title got you hooked. So you're sitting there assessing what your current prices are, whether you're selling products or services, and you're thinking maybe it's time to raise our prices. We've seen all these things going on since record inflation since COVID years 2021. And a lot of you are still selling things at the same prices you were in 2020, which is ridiculous by now because look at it. We've got more expensive rents. We've got more expensive materials, energy costs, fuel costs. Employees still want raises. They're going to get those cost increases. So why do you think that it's your business to absorb all that inflation, that record inflation? You're used to paying more for everything else. So why aren't you raising your prices? I'm going to get into some of the psychology that might be holding you back on that regard and give you some indicators on when to raise your prices and actually give you some tips on how to do it. So hope you guys stick with this episode because it's going to be valuable. And I want you to get some good feedback from this and actually do some things to increase your prices if it's applicable to you. So let's get into this. So here's why most entrepreneurs undercharge. Real hard truths, right? The main reason is that there's a fear or a lack of confidence around their product or their service. And they're also worried about if they raise their prices, what are their customers going to do? How are they going to react? So there's a lot of fear around that, right? And so understand that's a normal human reaction, emotion to feel like if I raise my prices, my customers will be angry. It's okay to feel that emotion, but I'm going to go through hopefully by the end of this episode, you'll realize like that's just a bunch of BS and I need to get over that kind of stuff and move on and do what's best for my company and my family and my goals, right? So the other thing that keeps you from raising your prices, and this one might sting a little bit, is maybe to say the money mindset that you personally have as a business owner. Everybody's got different levels of comfort and expectations and price limitations that we fixed based on how we grew up or our relationship with money. So these money mindsets can actually hold you back as a business owner. Let me give you some tangible examples of that, okay? Maybe, let's say for men out there, like maybe there's a price that you will not pay more for a t-shirt, for example. You say, no matter how much money I make, I'm just never going to pay more than $20 for a t-shirt. It's just ridiculous. And so you build these fixed limitations in your mind. And then when you get to that level above that or a little bit more, you start to feel uncomfortable about that, right? And so you assign your own limitations to what your customers are willing to pay or not. We've heard the phrase of don't count other people's money, right? Anybody that's ever worked in automotive space, especially you car dealerships, you get really conditioned to not count other people's money for them because you just don't know how much they have. You can't go by how they look, can't always go by how they act, can't even understand what level of income they can afford based on what they drive in. Now, you may have a presupposition and think that they're going to be broke just because they get out and they're wearing warm-ups and they got a rusted old truck, but it could be a multi-millionaire farmer that's ready to buy a fleet of F-450s because he just happens to need those for his business or he's expanded to a new area, but he likes driving the old rusty truck. Maybe it's sentimental, right? So you can't have these limitations on your comfort level of prices, your personal comfort level of prices on what you wouldn't pay for that kind of stuff and assign that to your customers. Because if your product's good, if your service is good, you'll be surprised that people will pay more for that. And they may even be paying more for that than you would comfortably feel paying for that much amount based on your own income, your own lifestyle limits, right? I'll give you an example of this from my corporate background. When I was a junior project manager in my 20s and I was managing some of these smaller oil and gas projects, those projects were between $500,000 to $1 million. And I didn't have a lot of money at that time, had a lot of college debt. My salary at that time was $40,000 a year. But man, for me, managing $500,000 to $1 million just seemed crazy. And I remember feeling the anxiety about making decisions and not wanting to lose that money and waste that money and running these projects. And I really felt that. And it was really clouding my judgment on what I would do because I was assigning my own personal emotions to $500,000 to $1 million to make key decisions, which were important for the company and safety and profitability and all these different things. Now, fast forward 20 years into that industry when I was managing projects that were exceeding $100 million and making very good decisions based on my experience, I was able to separate my emotion from the proper responses and the proper actions that we need to take to ensure profitability and safety for the company, right? Mitigating risks. A lot of you just haven't had that experience yet. And I get that. So you look at the services and you go, man, my competitors, they charge $150 an hour. But man, I couldn't personally afford $150 an hour. So you know what? I'm going to just charge what I could personally afford. I would probably be able to afford $75 an hour. So boom, there's my rate. I'm just going to just charge everybody what I am comfortable charging, what I would pay. You see how that's crazy? And it's very common. I've had these conversations dozens and dozens of times with different business owners and how they come up with their hourly rates and things like that. And it's always based on a comfort level or limitation that they built for themselves, which gets into the idea of counting other people's money for them, which is stupid. It's just stupid. You got to lose that whole philosophy. If that's the way you calculated your prices, lose that mentality. And this episode is going to help you do that, right? So, what is this thing? So, what is a most common mistake? What's the biggest mistake I see people, business owners waiting to raise their prices? It's just simply waiting too long. You're just waiting too long. You're in a reactionary state and try to instead of being proactive, and you just do these things as a reactive thing and you wait until let's see your most business owners, they raise their prices. This is probably you guys. When you're already feeling overwhelmed and you're a little bit stressed about things and you're just trying to stay ahead, and then you start to get in this reaction, oh, we're not going to make payroll. Oh, we got this big outstanding invoice for raw materials and all these things keep going up. And so you get all stressed and anxiety, and then you start to react out of an act of desperation to raise your prices. That's wrong. You're waiting too long, right? Start waiting for your costs to increase. We all know that rent goes up. We all know that energy costs go up. We know that labor goes up. All these things are always steadily increasing with time, but you're not raising your prices to cover those things, right? Or maybe you're waiting at how the quality of your services or product starts to decline. Maybe you're so afraid of raising your prices that you start buying crappier materials, or you shortcut things, or you do less things to draw down the price and reduce the price of the quality, and then your quality starts to suffer, and then people quit buying your product or calling you for your services, and then you have to get again reacting to raising prices. You're waiting too long. Don't do these kind of things, right? And maybe you're also waiting for your employees to be burned out because you've been loading them up with excessive hours, they're overbooked, and all these things are coming in and just asking so much from them, and they're getting time away from their family and they can't do this kind of stuff anymore. And you're like, oh, we got to do something to make more money. Let's increase sales. That's usually the first thing that most people think about. Oh, let's just increase sales. Why don't you just raise your prices? That's another option as well. If you're that backlogged, it's an indicator, right? So I'll give you an example of this. So one of my newer clients, Ben, he owns a laboratory that does testing for water samples. And while we're talking, one of our earlier calls, he starts to mention that his competitors, who he knows the competitor is very wealthy. He's got a bunch of exotic cars, big house, been around for a little longer than them. That wealthy, successful customer in the same space as him had sent out an email to the existing customer bases, which is probably thousands of customers. And that kind of news moves around. And he got a copy of that email and he was looking at the price rate increase for doing the exact same services that he's charging. And so I want to say the monthly rate that the successful customer, with the successful competitor, let me get these words right, was raising the rates from 165 a month to 175 a month, right? Now, it sounds like a small thing, but it's multiply that by thousands of samples and you can do the math on what those companies can make. And so he was like, and I'm only at 150. I was like, why aren't you at least 165? You're doing the same job. You got a pretty good market share. Why aren't you at least matching with his prices? And it came back to that psychology. I haven't raised prices in 3 or 4 years and I don't want to lose my customers. But I was like, your competitors charging a lot more than you percentage wise. Are you confident that you can deliver the same level of quality and service and repeatability? Yeah, we do that. So then why aren't you charging accordingly? It's like at least get to the rate that he was at. If you wanted to be competitive on price, get to the 165. And we made a decision at the end of that call to raise the prices. And so going from 150 to 165 is a pretty big jump. It's a pretty big jump in pricing increases for zero extra work, right? Because you haven't raised the prices in years. You're so worried about things, but that's just one example. Apply that to your own business. What are some areas that you're looking at that you haven't raised prices in a while? And maybe your competitors have, and they're still busy, but you're still holding on to that fear and that lack of confidence, right? And so that was one example. And I say that we need to be more proactive about price increases. As you start to see things, if you're the CEO of a company and you're starting to see the trend of materials increasing and labor increasing and insurance increasing and all these costs increasing, you need to look ahead at the end of the year instead of thinking about reaction today. Where is this going? Where's this trend going? We can forecast this out pretty well. Analytics, data, what your invoices are saying. Hey, by the end of the year, I think we're going to need to be here to maintain the same profit margin. And so just move it that way. Get ahead of that. Don't go through that phase of struggling and feeling overworked and all these other things because you've been suffering at your own decision at keeping a lower price. So here's the signs. Maybe you're wondering, what are the signs? I've mentioned a few in there, but let's be more specific about the signs of when you think you should raise your prices. So, first of all, look at your work schedule. How busy are you? If your backlog is weeks or months or however your industry seems to be, and you're always backlogged, that might be an indicator. That's market feedback. Maybe they like your product or service, but maybe you're not charging enough. So think about this question of things that you should ask yourself in these situations. If you were to raise your prices by, say, 10%, moderate increase, how many customers would drop off? Realistically, how many customers would drop off if you raised your prices 10%? And would you then earn how much if those people dropped off? If a few of them dropped off, do the simple math and calculate what you would be earning at that higher rate with fewer customers. It may actually be the same amount of money. Don't you think that would make your business life easier? Don't you think that would reduce your stress a little bit when you had fewer customers to serve at a higher rate, even if you were earning the same? So that's some simple math that you should be able to pencil out pretty quick and figure out, would I be earning more? You might even turn a profit if you raise your prices accordingly, right? Fewer people. That's not a bad thing. So the other thing is that if you have a lot of you guys, especially in sales, you big closers, you high ticket closers, a lot of you are really proud about your close rate. And every time I get somebody on the phone or I get a lead in my email, my close rate is this. And I think that you guys maybe also be pricing your things too cheap, and that's why your close rate's so high. Think about this. If Rolls-Royce decided to come out and go, hey, we're going to start selling our cars for $20,000, same quality, same everything. We're just going to start selling for $20,000 instead of $500,000. You don't think that there'd be a back order and like I would go get in line and buy a bunch of those and just drive a different one every day for 20 grand a pop. So is that close rate, which they would literally have a 100% close rate at that price, is that really an indicator of the quality and the profitability of the company and if that's a really good decision or not? No, it's not, because one, you'd lose exclusivity and maybe fewer people would actually want that than they do now. And so if you're getting 90% of your close rate, like if you get 90% of the people that get on the phone with you or in the emails with you or the DMs with you or look at your ads or buying your stuff, that doesn't mean your product's amazing. It means that you're probably priced too cheap, right? You're tracking different customers. So if your cost increases, but your prices haven't increased, that's a very dangerous situation to be in. That's silent business killer. We call that margin erosion. There's a term for that, right? Because as you start to erode your profit margin from, let's say, 40%, and you go, oh, prices increase, we're just going to absorb that for a while, and you get down to 30%, and then prices increase and labor costs go up, and then it's like 25, like creeping down over time. You're making less profit, which your business model was designed to make a certain profit margin to be able to sustain and be able to attract those right employees and pay people enough and pay for all these added costs and expenses. So you're just little by little just reducing your margin over time It's a silent killer. If you figure out that it's too late, sometimes you're filing bankruptcy because of that. And so the other thing is that, let's say that one other thing that's an indicator, let's say that you've greatly improved your business since the last price increases you've had. Maybe you've made substantial investments in new efficiencies or software, or better skilled employees, or maybe you've just been doing it long enough that your reputation's through the roof and everybody's in that demand and you're getting all these referrals now. Time to raise those prices. That's an indicator. If you've gotten better since the last time you raised your prices, you probably should be charging more. And I'll share a story here. Another former client, Cynthia, she's an attorney out of Colorado. When she came and worked with me initially, her hourly rate was $400 an hour, which is reasonable for what an attorney costs. She's got decades of experience. She's very well referred, $400 an hour. And nowadays, her rate is $495 an hour. And I don't know if we would have worked together, she wouldn't have raised it. She probably would have just stayed at $400 an hour because that's good money. That's competitive. But she started to notice that the rates were increasing around and like, why aren't I raising my rates to accommodate that? And so going from 400 to nearly $500 an hour, it's what is that, 20% math increase in prices? And to this date, no one's complained about that. That's expected from someone who's got experience, who's very good at what they do. They're competent, they're highly referred. They should be at the top of the rates, right? And so let me give you another example within her story. When she came and worked with me, she had this standardized business form that she was filling out, and it's in high demand, and she has a lot of expertise in filling out this form. She's got really efficient at doing this. I think it had to do with intellectual property and guarding secrets and things like for corporations. So they needed this kind of documentation for each of their employees. And she would go, it's only taking me an hour and a half to do these. So she was in her mind thinking is a time value proposition. And so she would assign her $400 an hour rate to do it. And if it took an hour, it was $400. If it took an hour and a half, it's $600. Right. And I was like, why are you doing that? Like, how valuable is this document to the companies? And why are you charging so little for based on just hours expended? And she really started about thinking about that. And she's like, I don't know. I think that this is a pretty valuable document. It's guarding their intellectual property, their copyrights, trademarks, all these kind of things like that. It's probably a document that's worth millions in reducing risk for these companies, especially some of the larger companies. Like, exactly. And so I was like, why don't you just come up with a flat rate since you get so many of these? Just come up with a flat rate. Don't worry about if it takes you 20 minutes to do one or 2 hours to do one. Just here's the flat rate. And that's what she did. And so initially, she charged 750 as a flat rate. So she went from doing like a little bit of $200 or $400 a pop to 750. And guess what? She's been doing that for years and nobody has complained about just paying the flat rate because she's really good at what she does, has a good reputation, and her pricing is back in line where it should be for someone at that experience level. And so now, when I just talked to her before this episode, she's charging a flat rate of $850 for the same service, whether that takes 20 minutes or an hour. So you can see that if we can disconnect the hourly rate limitation mindset on some of these services and start to look at the value proposition and what this is actually worth to the end customers, you start to realize that you can actually raise your rates. And a lot of you guys are holding back because of that kind of stuff. And so to cap that off, just ask yourself what your customers' return on that investment is. What is the risk that you're saving from them? What is the value of the problem that you're solving for them, right? That's a key way to understand about business, especially in the services field, is what's the size of the problem that your customers have that you're trying to solve for them? And what is the dollar value or the risk value assigned to that? And go, if I solve that for them, if I solve $100,000 problem, is it fair that I only charge $100? That's silly. Your pricing versus the ROI is not aligned anymore. You see that? If I had $1 million problem, which to me, let's say we'll call it a problem or a challenge. Like, for example, I help people scale and exit companies. These are $1 million challenges, right? If we're presenting them to joint ventures or private equity or any kind of investors, we have to understand what we're presenting and also speak the right jargon to get the right valuation and present the numbers. Or managing risk or trying to increase the valuation, maximize the exits. That's a multi-million dollar problem or challenge. Should I only charge $100 for that? No, I make six figures on one of those transactions because it's fair to charge $100,000 if you're selling something for millions of dollars, right? Understand the value proposition. It's not a factor of time, it's based on your experience and your results. Years of experience matter. If you're good at things, you compound, you get a good reputation, you get to charge those kind of rates. Doesn't apply to everybody right now, but you need to be figuring out what the value is that you're creating for your clients. Charge accordingly. You don't want to be the bottom of the barrel, right? Let's talk about the bottom of the barrel here. Cheap prices attract difficult customers. You've experienced it. If you sell any kind of products or services, I guarantee you felt the sting of your cheapest customers demanding the most from you. There's a phrase that we use on that. Those who are willing to offer you the least often are the same people that demand the most. You've heard that phrase. You felt that phrase. It stung you before. And so think about the cheapest customers you have. They value you the least because you're cheap. Let's say they're very well off and they're successful and you're the low dollar bargain basement priced person. They're going to value you less. They're going to treat you that way. They're going to negotiate the hardest with you. Guys, I've sold some things on Facebook Marketplace in recent weeks, just cleaning car parts out of my shop and stuff I don't need. And so I don't want to ship these things. They don't fit in boxes. I'll just have someone to come pick these things up or I'll drop them off at their doorstep. And these people on Facebook Marketplace, anybody has gone through the agony of selling things on Facebook Marketplace, these people, there's cheap and then there's Facebook Marketplace buyer cheap. That's like a sub level of cheap. They're cheaper than cheap, right? And they want to negotiate you and lowball you on stupid stuff. And it's frankly just a lot of times it's a waste of time chatting back and forth with these people. And so the best way I can tell you about Facebook Marketplace is put your firm price, like your actual load, the lowest that you will actually take, no negotiation. Put that as your price. And when someone lowballs you, just say no, no. Keep saying no until they decide that your lowest price is actually the right price. And then they go, okay, I'll buy it anyways. Save yourself the hassle of negotiating people at the lowest barrel bottom price. It's terrible. It's terrible stress, anxiety. Just say no. It says in the ad, it says firm. Try reading that, right? It's much better way to handle those kind of situations. And so the other thing about the cheapest customers is they also complain the fastest. You ever notice that? I got a story here. Selling wheels, right? When I initially got into selling wheels in 2003, man, that's a long time ago, by the way. I saw the competitors in the arena. They had inexpensive sets of car wheels and they had forged, made in the USA, top quality wheels. And I was like, I want to serve the bigger market. And so we come in and I want to serve everybody. And so basically, I had the entry level product, which was at that time probably, I don't know, $600 for a set of four wheels, like a cast wheel made overseas. And at that time, forged wheels were probably $3,500, $4,000 a set. So pretty big price discrepancy between the two. And it didn't take too many months of selling the cheap wheels to realize what a pain in the ass that those customers are compared to the people that were buying the premium product, right? And I'll give you an example. One of them, one of the customers, actually a local Houston guy, I'm not going to name names, but he just wanted a cheap set of wheels for his car. And they were like the lowest price things, probably Ford Stars, lowest price wheels I had at the time. And they were cheap. I think they were like 350 bucks a piece or something like that, really inexpensive wheels. And he just wanted them to use for the track, maybe put some drag radials on the back. And so sold him that set of wheels, didn't think much about it. The guy has money. He was just being cheap, right? Wheels come in and he calls me and I know he just received his wheels. I'm saying, hey, what's going on? And this guy starts yelling at over the phone. He starts yelling at the top of his voice. And I know the guy in person. And he's never been like this. He's screaming over the phone. My wife is within earshot. And she's like, what the hell is going on over there? He's screaming because the finish, the matte black color wasn't as good as what he thought it should be. And I was like, dude, these are the cheapest wheels we have. They're made overseas. They're not show finish. And he's like, I demand this and I should get what I want. And the customers always, he's like yelling. And I just hung up on him. I was like, screw off, dude. We can talk in person next time I see you. And so cheap customer buying, even when he has money, he's being cheap and thinking that it needs to be a flawless, perfect finish, right? Guys, I've had so many examples of that where people be like, I found a speck of sand in the backside of the wheel that nobody can see. I found a speck of sand in the powder coating, and I think you should give me a discount or a refund for this one wheel. And it's the cheapest wheels, right? You go sell an expensive set of wheels, people are like, awesome, this looks amazing. And some of those aren't perfectly finished either, but they're like, this is a great looking wheel. I can see the machining's done well, it balanced nice, it looks amazing. You get a lot of compliments. They're happy to pay the invoice and thousands of dollars more, and they're happy about that kind of stuff. And then they keep coming back when they buy a nice new car every year. They want new sets of wheels and they tell their friends about you. And so quit wasting your time at the bottom barrel customers. Quit thinking the low price is the thing that you want. Because I'll tell you, just giving you 20 years of compressed business experience in that segment there. Quit wasting your time with those kind of people. It gives you more heartache. So, what is a premium customer then? If we're talking about the cheap customers, how do the premium customers typically respond? Most of them tend to respect your expertise and your reputation that you've built, because people who are better off or more successful likely value their own reputation and expertise. And so they can see the value of that in other areas that they're needing. And so they also tend to value speed and efficiency, and they're willing to pay for it. Some of these customers are willing to pay expediting fees to move up in the line or get a more premium experience or VIP this. And they're willing to pay for that because they value time more than people who don't spend money. And so they're willing to pay for that. You should never offer speed and efficiency for free. That shouldn't be a free thing. That's a value thing that only premium people can really appreciate and are willing to pay for. So kind of rearrange that. So they also understand that quality costs money, right? When you're a premium customer and you want premium, better products and service, that costs more. And they're okay with that. Chances are they're highly successful because they do something similar where they're selling a product or service or working for a corporation that does premium products that's able to afford their salary. And so they're just passing it forward. I'm going to spend the money too. I value that kind of stuff. Right. And so think about the psychology here. The pricing that you put out there actually communicates your quality. You ever thought about that? I'm a business coach. Do you think that my level of clients would be the same if I was charging $50 an hour, $100 an hour versus $1,000 an hour, or even more in some circumstances based on what the scope of work is? No, I would have a different set of clients. And you can't just automatically charge those rates if you can't deliver the results. But understand that the value that you're putting out there can largely be diminished by what people perceive as your quality. You come in at the low rate, you're already assigned like you're at the low, you're not even close to average. Like I don't even want to talk to the cheap person yet. You're going to get the crappy customers, right? And so think about that kind of stuff. So how do you raise? Let's get into how do you raise the prices? Let me give you some simple tactics because I see a lot of you guys doing this wrong. I've had clients that drafted up the initial email that they were going to send and we review it together. And I'm like, oh, hell no, just delete that shit and let's start over. Okay. So, first of all, when you're raising your prices, don't be a pathetic wimp and apologize. You feel that, right? Don't be a wimp. Don't apologize. And don't use crap like, unfortunately, due to rising costs, blah, 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 wah. That's how 90% of you guys want to start that email. Announce your price raises. Unfortunately, due to rising cost, wah. It's an apologetic, weak stance. You're a business owner, you're CEO. It's your duty to ensure the success and livelihood of your business. And you're going to apologize for asking for more money if you're delivering the value that you should be. You need to be more confident in these situations. So be more confident. If you really believe in the product or service that you're putting out there and you deliver the results, you don't have to apologize about raising your prices when they're necessary, right? So here's a better version of that introduction to raising prices to your customers. Maybe you say something like, to continue delivering the level of quality and service that our customers expect, our pricing will be updated effective on this date and tell the price. You didn't apologize about it. You said you guys as customers have a certain level of expectations around quality and service. We're doing this to uphold that and maybe even increasing that, maybe even improving that, right? These increases should always go to fund excellence, not just try to get by or patch holes. So think about this. If you raise your prices and it allows you to have more profit to be able to spend more money, pays for better employees, pays for maybe better materials if you're in manufacturing or fabrication, things like that. You can actually use more quality materials or expand your product line when you have more money to do that. You get better systems. You can afford better systems, ERPs, better software, better equipment, better machinery, better tools, all these things that you can afford when you can charge more and actually make more profit, right? Don't you think those are going to make your business a little bit more profitable, a little bit more enjoyable, having better employees, better skilled employees that you can actually afford? And ultimately, all this boils down to having a better customer experience, right? Because if you're doing things to get a better result and you're putting that money back into excellence, your customers are going to enjoy that experience. And that's what really matters, isn't it? So, to recap and summarize this episode, charging what you're worth, it's not about ego. It's about building a business that can afford to keep the promises that you made to your customers. If you can't afford to keep those promises to your customers, you may be needing to raise those prices. So I'm going to ask you at the end of here is to shift your mindset away from that fearful, comfortable pricing that you've always been dishing out to people, hoping not to offend people with your pricing based on your own level of comfort and spending and your own financial setups. You need to focus that away from get out of that mindset and start moving towards focusing on the value that you create for your customers. So I'll keep this episode short and sweet. Hopefully, you guys got some valuable thoughts. You're going to take some actions to raise your prices and look at those kind of things. And don't wait till you're stressed out and struggling, guys. Quit reacting to this kind of stuff. Put it out there. Start getting ahead of these price increases. Be a legit CEO and start to focus on where the industry or the product or the service you have is going and meet it where it's going to be instead of just reacting in the past and thinking that you should never raise prices. I hate to see you guys go out of business and stressed out and those kind of things because you're just late to the game and getting there. But hopefully, if you enjoyed this episode, share it with people, your friends that are business owners. You guys are in different groups on Facebook and Instagram that are business owners. Share this stuff because they need to hear this kind of stuff. They're not hearing the truth from enough people. And I want you to raise your prices if you can and move and make a more profitable business for yourself. So thanks for hanging out with me. We'll see you on the next episode.